Hey guys, Bill Soriano here from Pittsburgh again. It's Sunday, about 10:32 a.m. Eastern time. So again, if you get any value from these videos, please subscribe, hit the comment button, leave a comment down below in the section there. Anything you do to help me out. So I said yesterday in my video where I did some training on uh, how to use the Lux Algo indicator and the DeLorean EMAs to help you to identify the trend bias on the 4 hour time frame and also how to identify the best order block to trade from, where to set your alert. Okay, so I do have the indicator on right now. And I told you yesterday also that I was going to show you the new entry model. It's not really a new entry model, but you just have several options, and I'm going to test this out for the next month or so, both using the indicator and the EMAs to determine the trend and identify the order blocks for me. And again, if you're good at determining the 4 hour trend on your own, just looking at the market structure, then just continue doing that. Don't worry about implementing the EMAs. Anyway, so here we go. We have a 4 hour zone here, right? The trend was obviously bullish. We can tell that just by looking at this using the indicator. We have a change of character. We have a break of structure to the upside. That shows us that this is bullish, just looking at the market structure. If we look at the EMAs, we see price above the 800 and we see the 50 above the 200. So that also is our confirmation that we're in a bullish uptrend on the 4 hour time frame. If you need to know that information, it's in the video I made yesterday. I'll put a link in the comments section to that video as well. Or you can just click on the channel and you can get it. So this is the 4 hour area that we're looking at. This is our 4 hour order block. Again, we're using the indicator to identify these order blocks. There's really no imbalance inside that order block, but there is imbalance. There was imbalance here coming into the order block, so that's good, right? There is an impulse candle that breaks structure. But again, this system will more or less use the last down candle before the up move starts, or it will use the last up candle before the down move starts to identify the order block. And it will go by the lower wick. So it doesn't necessarily have to be a red candle for an uptrend or a blue candle for a downtrend. Whatever candle like has the lower wick. In this case, this red candle has the lower wick. Now, if this blue candle after it would have had a wick that went down lower, then it would have probably used that candle to identify the order block. It goes by the lowest wick. Um, But the main premise is that it's the last up candle before a down move or the last down candle before an up, right? So that's why we have this order block, and the indicator is giving us that order block, right? And the next one is really far away. It's all the way down here because the indicator just sees this as one move up. These little pauses here aren't really pullbacks. So it doesn't identify any of these areas as order blocks, but you can see tons of imbalance there. So there's tons of reason for price to come all the way down to this order block at some point, but we don't know when. So that's why we wait for a confirmation. Now we could do a risky entry, which would be we just set our limit order at the 4 hour order block and set our stop loss down below here, but we don't like to do that. We look for the confirmation. So the main thing we want to remember is this. We need to have, let me just type something in here, at least a 1 to 2 risk to reward to take a trade. Okay, in order to take a trade, we need to have at least, the bare minimum is a 1 to 2 risk to reward. So we're risking 1% to get 2%. Now, if you only risk a 0.5% of your account, that's fine. Then you risk a 0.5% to get 1%. But you have to have at least a 1 to 2. If you can't get a 1 to 2, then you don't want to take the trade. And I'll show you how you're going to determine that in this video. I'm going to show you 3 different entry places you can enter the trade, and you're going to determine which one to use based on where you're going to plan on exiting the trade, where you're going to put your profit goal, your target, so to speak, and where you're going to have your invalidation zone. Okay. And we always now, guys, have to start using the 4 hour order block, below that 4 hour order block for a buy or above for a sell for our invalidation point. Trying to refine this area here by using the lows inside here just isn't working out right now. So we have to go back to using that order block, that 4 hour order block, to determine our invalidation point. And we're also going to look for another order block. In a buy, we're going to look for a supply zone where we're going to do our take profit. For a sell, we're going to look for a demand zone to where we're going to take profit. So we could see a supply zone right here. Okay. So if there's no supply zone, the indicator gives us this supply zone. That's what we're using the indicator. And again, we have that set the swing point on 10. I show you that in the video I made yesterday. So here we have, now if you don't have if it doesn't show you an order block, then you can use a high, right? Or a low for a sell. In this case, we have an order block. Now, if you have a high that's inside of an order block like this, then you can use that high. Okay. Instead of the beginning of the order block, you can go to that high because chances are that's where price is going to go. So this is EUR USD. So we want to drop down to the 1 hour time frame and wait for a market structure shift before we take this trade. Okay. So we could see here that the most recent price action is down on the 1 hour, right? Down to get into that 4 hour zone, right? So we need something to happen. We need a market structure shift before we can look to take this trade, right? Because we don't know if price is just going to go right through this zone or not. Okay, now I do have the indicator on right now, and you can see here, the indicator is telling us that we get a market shift right here. It's telling us we have a change of character, right? We're on the 1 hour time frame, right? We have this high right here, it marked out, and this candle right here goes up and gives us that market shift, gives us that change of character. Now, the other thing that we can look for is a buy shift, okay, with the moving averages. Remember, we have the 5 and the 13 moving average. The 5 is the yellow, the 13 is the red. If we get a cross up, if the yellow crosses and closes above the 13, that's a buy shift. That also is an indication that price is ready to move in our direction. So we can set an alert for that. Okay. And then once that alert goes off, we can then wait for a change of character. We could get it sometimes on the same candle, like what happens right here. This candle right here, the yellow crosses and closes above the red, giving us our buy shift, and we also get a change of character all in one candle. Okay, now we get a change of character, so it identifies a 1 hour supply zone right here. So it is this candle right here. And you could see, now it's showing you all the supply zones here, but you can see this one right here. This is the supply zone, the refined supply zone on the 1 hour time frame that the indicator is giving us. Okay. So now I'm going to show you your 3 choices to enter this trade. Okay. Now you can see a supply zone here on the 1 hour, but we're not going to use that for our take profit. We're going to use the 4 hour supply zone. Okay. So right now, right, we're going to take our fib tool out. We're going to do a fib retracement, and we're going to draw it from this low here to this high. Now, actually, because this didn't make a new high, we're going to use this low down here. Okay, so we're going to draw our fib from there right up to there. I'm going to put a black line there so I could see that. Wait a second here. Okay, now You have several choices here when you're looking to take this trade. Okay, now again, you're on the 1 hour time frame. You can use a 61.8 fib retracement. You can use a 71 fib retracement, or you can use the beginning of the refined order block that was left behind from the change of character move. Okay, and you can see that that refined order block entry is just under the 71. Okay, it's just under the 71. And so the way you determine which one to take is this. You're going to grab your tool, and for right now, let's put it on the 71. Okay. Now again, our stop loss always has to go below the low. So what we're going to do is we're going to now go back up to the 4 hour. Okay, because we want to make sure we're putting our stop loss in the right place. Okay, so our stop loss has to go down here, right below the low of the order block. Okay, and our take profit is going to go up at the high inside of that next supply zone. Okay, and what we see is that if we get in at the 71, okay, we're going to have a 1 to 2.08 risk to reward on this trade. So is that enough for us to take the trade? Yes, because our minimum is at least a 1 to 2. So this is going to give us a 1.208. Okay. Now you can see here, if you move this entry up to the 61, you would now have a 1.67. So you can't use the 61.8, okay, because it doesn't give you enough of a risk to reward. You have to use the 71 in this case. Now, if the 71 didn't give you enough, then you would have to go down to where the order block is on the 1 hour time frame, right? And that would be just below here, okay? And that, of course, would give you a, that would give you a 1 to 2.23. So the idea is that you want price to retrace as little as possible to be able to still get in the trade, right? Because a lot of times price will come down to the 61.8 or the 71 before it gets to the order block, and then it'll take off to the upside and you'll miss the trade, right? So this helps you out, right? If possible, you could get in at either the 61.8, the 71, or you can get in at the order block that, the refined order block on the 1 hour time frame that the indicator gives you. Okay, in this case, we would want to get in at the 71 because that gives us the closest entry with at least that 1 to 2 risk to reward ratio. Now, if we were able to get a 1 to 2 risk to reward at the 61.8, then we would put our limit order there so that we have a better chance of the limit order executing, you see? But you have to remember that in order to identify your invalidation zone and your target, you're going to use that 4 hour time frame, not the 1 hour. You have to use that 4 hour, the low for a buy of that 4 hour demand zone here. You have to put your stop loss right below it, not right at it, a little bit below it. Okay. And then you're going to use the next 4 hour zone for your take profit, right? You're going to normally use the beginning of that zone, but if you have a high inside of that zone marked out for you by the indicator, you can use that high. If you don't have any zone, then you have to use a high or a low that the indicator gives you. But again, we want to rely on this indicator so that everything is objective instead of subjective, right? Okay, so we're going to do this for the next couple months. We're going to do it good, and we're going to stick with it, and we're going to see what our ratio is, right? We're using the indicator, use the moving averages to determine your trend on the 4 hour and your supply and demand zone on the 4 hour. Once that's hit, you drop down, right? You wait for that market structure shift on the 1 hour, right? Whether it's a buy, right? So let's see if we can get this all mapped out for you here. Right? 1 to 2. Right? Once 4 hour zone is hit, drop to 1 hour and wait for market structure shift, choke, right? And you wait for the indicator to give you that. Now, if you're good at determining on your own, that's fine. But I suggest if you're beginner and intermediate, you just wait for the indicator to give you that, right? We have the indicator set on 10 for the swing points. I show you that in the video I made yesterday. Okay, so you wait for that market structure shift. Now that can either be a buy or sell shift. Let me just get rid of this here. It can be a buy or sell shift using 5 and 13 EMA, or that can be a change of character, a choke. So that's the two ways to determine that market shift. After a shift occurs, draw fib retracement, right, from high to low, or low to high. Right? So you draw from high to low for a sell, or low to high for a buy, right? That's how I do it, right? Enter on 61.8 fib, 61.8, 71, or your refined 1 hour 5 4 zone, whichever one is closest price and gives you a minimum, right? Minimum 1 to 2 risk to reward. Okay, that's basically minimum. I don't know if I could spell minimum, guys. Okay, so this is what it looks like. Again, you want to have at least a 1 to 2 risk to reward ratio. I have that here twice. Okay, let me see what we got here. So once the 4-hour zone is hit, we drop to the 1 hour and we wait for a market structure shift. Okay, so that market structure shift can come in the form of a buy or sell shift using your 5 and 13 EMA, or a change of character, okay, with the indicator. Change of character on indicator. Now, in this particular example right here, we got both of them, right? Right? So I would say that, and I would say probably or both. Or both. And that's going to be your best option, right? You know, you can do an alert for the 5 to 13. Okay. So in this example here, like I said, we got both. This candle right here not only caused a sell shift using the EMAs, but it also broke structure, causing the change of character on a 1 hour time frame, right? And again, you have to go to the 1 hour to see that. There's the change of character right there. The indicator gave it to us. This was the high it used because price came down and made this low here. Okay. Now, myself, I don't like that particular area there because price didn't make a new low down here. See how these wicks go a little bit lower? So in that case, some people may argue that this is where that change of character would occur. We would need a break of structure up there, okay? But the indicator is giving us this. So we're going to go with the indicator so that there's no question, right? So it's not subjective, it's objective, right? We know we use the indicator on the 1 hour, and that's what we're going to use, okay? So we've used the indicator, and we also got that buy shift to confirm it, right? So if we wouldn't have got the buy shift, right, at the same time, then we might say, I don't know about that area. Maybe the indicator is giving me the wrong place. But in this case, it looks pretty good, right? It looks like that could be it because of this strong impulse candle. Okay, so then once that happens, once you get the market shift, right? After the shift occurs, you're to draw the fib from the high to the low for a sell or the low to high for a buy. And then you have 3 places where you can enter based on whichever one's closest to price and gives you at least a 1 to 2 risk to reward ratio. Okay. You can enter at the 61.8 fib, the 71 fib, or your refined 1 hour supply or demand zone that the indicator gives you, whichever one is closest to price and gives you at least a 1 to 2 risk to reward on that trade. So we showed you how to do that in this one here. So let's do another one. There's one more. And by the way, if you look at my flags here on my panel for each pair, the blue flag, you might want to write this down. The blue flag means that the 4 hour trend is bullish and I have an alert set. The red flags mean the 4 hour trend is bearish and I have an alert set. Okay. If there's no flag, then that means we couldn't determine the trend on the 4 hour, so we have no zones identified and no alerts set. Now, when you get a yellow flag, that means that the 4 hour zone has been hit. Okay, so if we go to GBP NZD here, we see that the indicator was giving us this zone right here, and we see that this zone has been hit. Okay, now, by the way, we only like to trade zones once. But you can see here that because there's no break of structure here, this zone would not have showed up until after this happens here. So although you see those wicks touching that zone wouldn't be there. And you could do a replay to see that. I don't want to waste time on the video right now because I know that it wouldn't show up. Okay, so that tells you to check that every day now to see if you're getting the market shift, because that's the next step in that. Okay. And then if we have a green flag, that means that we had a market shift. We've identified an area to trade from, and we should have a buy or sell limit set with our broker if we're going to look to take that opportunity, right? Okay. Has to be at least a 1 to 2. So that's what the green ones mean. So I showed you that here. Which one did I show you actually here? I showed you EUR NZD. So let's do one more because there's one more that's set up here for when the market's open tonight. This is NZD CAD. NZD CAD it's in an uptrend. The indicator tells us, what do we have here? Indicator shows us a change of character, and it also shows a break of structure. That's our confirmation that we're bullish. If we look at the moving averages, right, price is above the 800 and the 50 is above the 200. So that is also our second confirmation or our actual confirmation that it's bullish. Okay. So here's our 4 hour zone. The indicator gave us this 4 hour zone right here. And price hit our 4 hour zone. So what do? We drop down to the 1 hour and we wait for the market shift. Okay, so here's price hitting our zone, right? Price is bearish coming down into the zone, so we need that market shift. Well, right here we get the sell shift using the 513 EMA. Okay. Now, if you can't tell if you got a cross, you have to look over here because this is going to give you the numbers. See the numbers there? The yellow is the yellow, the red is the red. So we're looking for the yellow to get bigger than the red. It does right here. So we get that shift right there, but we don't have a change of character yet. So right here, the indicator tells us that we get a change of character, right? So what do we want to do? We want to go to this low right here, and we want to draw our fib from that low. And also, by the way, it's giving us a refined 1 hour zone right down here. And there is imbalance at this zone. But the tricky thing is, one candle back, that wick goes all the way up. So there may not actually be imbalance there that needs to be hit. But it doesn't matter. We're going to use we have three different options, right? We draw from there to there, right? And we can enter here on the 61.8. We can enter on the 71, or we can wait for price to drop all the way down to our refined supply zone, and we can enter from there. Okay, so it's giving us three different places to enter from, right? So what do we need to do? We're going to grab our tool. We're just going to, for right now, we're going to put it at the 71, our entry. We're going to go up to the 4 hour now. We just want to make sure that we're putting our entry below the 4 hour zone, right? And then what are we going to use for our target? So this is our invalidation zone, right? Right below the 4 hour. And we're going to use the beginning of this supply zone for our target. We're not going to use the highs because they're before this. So we're going to run this all the way up to there, okay? And so at the 71, we have a 1 to 2.28. If we move this up to the 61, we have a 1.7, okay? So we don't want to use the 61. We use the 71, which gives us a 2.28, right? If we did decide to drop down and use the refined order block here, okay, then we have to drop down to the 1 hour to see that. Then we would get a 3.85, okay? But we want to use the entry that's closest to price that gives us at least a 1 to 2 risk to reward ratio, because that gives us a better chance of getting in the trade, right? Because we know from experience that sometimes price will come down and it won't quite get to our zone, and then it will take off to the upside. Okay. So again, let me just show you this here one more time before I finish up this video. Okay, so we're on the 4 hour time frame, right? We have our trend identified using our moving averages. We let the indicator identify our order block. Price comes down, hits our order block, right? Right. If we're using market structure to determine the trend, our indicator is telling us we have a change of character and a break of structure. That's the confirmation that the trend is now bullish. Okay. So again, but we're going to, for the purposes of this testing, we're going to use the indicator, the EMA'S for the most part. Now, price hits your area on the 4 hour. What do? We drop down to the 1 hour. We wait for the market shift. Okay. Now, we get a buy shift right here with the EMA'S, the 5 and the 13. And we can use that, right? But it's better to wait for both. So then we get the change of character right here. The indicator gives us the change of character right here. When that high right there gets broken with a close above it. So now, at that point, we would draw our fib from the low to the high. Okay, but now, so that would look like at that point. Now, also keep in mind, whenever we get that change of character, the indicator gives us a new supply zone, a refined supply zone here down on the 1 hour. You can see it's inside of the 4 hour here. So we're just going to highlight that for right now. Like that. Okay. So when we go up to the 4 hour, we can see it. Okay. So here you would draw your fib initially from here to this high. But now that we've got here, prices moved up to here, so you have to continually move your fib retracement tool up as price moves, right? Until it comes down to your zone. So this gives us our three areas to order from, right? To enter from, the 61.8, the 71, or the actual refined 1 hour zone, right? For a buy, it would be, it's always the beginning of the refined 1 hour zone, right? That's where you would enter from, the beginning. Okay, so now we have that. We're going to grab our fib tool. I mean, our open our position tool, long position. We're going to start here at, let's start at the 61.8. Let's do that because that's the closest point to price, right? Now we're going to go up to the 4 hour because we have to make sure we're identifying the correct, we'd see the invalidation zone on 1 hour, but we need the 4 hour for the next supplier demand zone for our take profit. So we're going to drop this down below this low, right below the low of that demand zone. And then our take profit's going to go all the way up at the beginning of this next supply zone. And we're on the 4 hour. So we see here, right, this one gives us a 1 to 1.73 risk to reward ratio. So that's no good. So we can't use the 61.8. So our next option is the 71. And the 71 gives us a 1 to 2.33 risk to reward ratio. So that is the one we would take. Now, if for some reason, guys, that 71 wouldn't work out, then you would have to drop this all the way down to the refined 1 hour supplier and demand zone. Okay. And you could see there it gives us a 1 to 1.397. Okay. But our choice for this one is the closest one to price that gives us at least a 1 to 2. So it would be the 71 here. Okay. And we can see all that on the 4 hour. Okay. And then we can drop it back down to the 1 hour if we want to. Right. But that's what it is. So that's the entry strategy. Okay, so I got it all done for you down here, guys. Where did I put that? I put it on this one here. So right now we have the rules here for the entry strategy. Just move over here. Again, at least a 1 to 2 risk to reward once the 4 hour zone is hit. And again, we're using the indicator and the moving averages to determine the trend bias on the 4 hour and identify our supplier demand zone. Once that 4 hour zone's hit, we drop to the 1 hour, wait for a market structure shift, which could come in the form of a buy or a sell shift using the 5 and the 13 EMA, or the indicator giving us a change of character, and then it gives us another a refined 1 hour supplier demand zone, or both. Both is obviously the best option. After a shift occurs, we draw the fib retracement from high to low for a sell, low to high to a buy, and then we determine our entry on the 61.8 to 71, or the refined beginning of the 1 hour supplier demand zone, whichever one's closest to price and gives you at least a 1 to 2 risk to reward. So we start with the 61.8. If that doesn't work, we go to the 71. If that doesn't work, then we go all the way to the refined 1 hour supply and demand zone. Okay, that's it, guys. Any questions? Get in touch with me. Again, I get all this. I've gotten all this knowledge from the educators at Iovia, the company that we're with, used to be IM Academy, and again from the lead educators in our community that I'm a part of. There's probably over 7,000, but 7,000 of us by now in the community. Okay, and so if you want to get information on how to join that community, get access to everything at the company, the live educators, the scanners, the apps that send trade ideas right to your phone, and all of the training in our community, our custom indicators, our impulse, trading strategies, everything. Just let me know. There'll be information in the description of this video to get started. Have a great day, guys.